Hello! I've recently come across some fascinating developments concerning NVIDIA stock, and I feel compelled to share why I am increasing my holdings at this moment. My perspective has been shaped by an insightful discussion I had with a Microsoft engineer who provided a deep dive into the implications of DeepSeek. Naturally, I had numerous questions, as I wanted to grasp the long-term ramifications this technology might have on the AI sector, and more specifically, its potential influence on NVIDIA. Given the substantial market fluctuation we recently witnessed, including nearly $500 billion in lost value, I decided to analyze the situation more thoroughly. What I gathered from our discussion was that OpenAI had leveraged a process called Distillation to create a more cost-effective model. The engineer I spoke with likened America's current position in AI to a modern-day Sputnik Moment, a term referencing the shock experienced by the United States when the Soviet Union successfully launched the world's first artificial satellite on October 4, 1957. This historical parallel underscores the importance of innovation and competition, leading me to believe that NVIDIA will remain a stellar investment over the next 3 to 5 years. Now, let's delve into a more detailed analysis of the AI chip market, NVIDIA's valuation, and what I have learned from my discussion. Some analysts are concerned that demand for AI chips will peak by 2025, potentially slowing NVIDIA's growth. The fear stems from the possibility that, as AI development stabilizes, companies may require fewer NVIDIA chips. However, I strongly disagree with this assessment. In reality, the global AI competition, particularly between the United States and China, is only intensifying. This heightened race suggests that demand for AI hardware, including NVIDIA's chips, will continue to rise. From a valuation standpoint, NVIDIA currently has a price-to-sales ratio of 30 times, which I find to be quite reasonable. While some might argue that this valuation is excessive, I believe the company remains fairly valued given its immense growth potential. The AI revolution will propel NVIDIA to new heights, generating substantial revenue and profitability. By the end of 2025 and into 2026, I anticipate NVIDIA's stock price surpassing $200, presenting an excellent opportunity for strategic investments such as long-term options, covered calls, and put selling. Specifically, I would focus on selling puts with a 30 delta and executing covered calls at the same level. Every earnings season, NVIDIA's CEO provides valuable insights into the company's future. And each time, we see continuous innovation reinforcing NVIDIA's dominance in the AI industry. While other companies and competitors exist, NVIDIA's market position and opportunities remain unmatched. Given this, I recently reflected on my NVIDIA holdings, considering whether to adjust my investments. However, after thorough analysis and discussions with experts, I have confidently decided to continue accumulating more shares. A particularly intriguing aspect of my conversation with the Microsoft engineer revolved around China's AI strategy and the impact of DeepSeek on the US market. The central question that arises is, who will ultimately emerge as the leader in AI? And where should investors focus their capital to maintain a competitive edge? My conclusion remains unchanged. NVIDIA is the best bet for long-term success, and investors should not be overly concerned about competitors or the broader AI race. Regardless of whether China is utilizing older or newer NVIDIA chips, the demand for the company's hardware remains constant. History often repeats itself, and in investing, understanding past trends can be invaluable. The Sputnik Moment analogy is particularly relevant because it reflects how unexpected advancements can spur urgency and innovation. Just as the United States responded to the Soviet Union's space success with increased investment and rapid technological advancements, we are witnessing a similar dynamic in AI. The implications of this competition are enormous, reinforcing my confidence in NVIDIA's continued growth. DeepSeek R1, for instance, has employed AI distillation, leveraging massive models like GPT-4 and LLaMA to train more efficient, smaller models. Instead of storing vast amounts of information, this approach mimics the responses of larger AI models using a student-teacher framework. By drawing knowledge from multiple AI sources, the system improves adaptability and robustness. Moreover, It can operate on consumer-grade hardware, making AI technology more accessible. One potential downside of these smaller models is the increased risk of hallucinations, a phenomenon where AI confidently generates incorrect or biased responses. While I personally wouldn't rely on DeepSeek for critical applications, I recognize its broader implications for NVIDIA and the AI sector. The key takeaway here is that AI's role in the economy will continue expanding, with NVIDIA remaining a fundamental player in this transformation. The democratization of AI through DeepSeek may alter pricing models for large AI companies, reducing reliance on cloud-based AI services and disrupting existing business strategies. OpenAI, for example, currently offers a paid plan, whereas DeepSeek's open-source nature allows more companies to develop AI solutions at a lower cost. While this shift is significant, it does not reduce the demand for high-performance computing power. Training large AI models still requires immense resources, ensuring that NVIDIA's H100 and future B00 AI GPUs remain essential. Consequently, I expect NVIDIA's demand to remain strong in 2025 and beyond, supporting a $200 stock valuation. Beyond AI, NVIDIA's business thrives in multiple high-growth areas. Data centers, for example, serve as a crucial revenue stream, providing consistent cash flow. The gaming GPU market, another key segment, continues to expand, with NVIDIA maintaining its position as the gold standard for gaming, professional visualization, and crypto applications. Gaming GPUs remain one of NVIDIA's fastest-growing divisions, driven by the increasing popularity of gaming and esports. Another promising area is the automotive and robotics sector. NVIDIA is making significant strides in AI-powered autonomous driving and industrial automation. Tesla CEO Elon Musk has repeatedly emphasized the potential of robotics and full self-driving FSD technology, projecting that Tesla's value could surpass even the biggest tech giants due to advancements in AI-driven transportation. NVIDIA's role in this evolution is substantial, as its technology powers many of the AI models driving these innovations. Looking ahead, I believe autonomous driving and Tesla's FSD technology will gain widespread adoption by 2027 or 2028. Elon Musk's predictions suggest a major industry shift within the next 2 to 3 years, making it crucial to invest early in companies poised to benefit. While there is no certainty in any investment, I see NVIDIA as the best early opportunity. If NVIDIA's stock falls below $150 per share, I would consider selling puts aggressively, allocating up to 25% of my portfolio to capitalize on this long-term growth potential. One particularly exciting aspect of AI development is the rapid decline in training costs. AI training expenses reportedly decreased by approximately 75% per year, resembling the cost reductions seen in genome sequencing. This trend fosters exponential innovation, further amplifying demand for AI hardware and infrastructure. Many companies driving this demand may not even exist yet, but as AI adoption grows, the need for NVIDIA's GPUs will continue to rise. During a recent extended discussion, we explored various areas where AI is expected to make a significant impact. One major sector is autonomous transportation, particularly robotaxis. The economic advantage of driverless taxis over traditional services is substantial, making this a compelling growth area. Similarly, AI is poised to revolutionize healthcare, leading to lower costs for gene sequencing, advancements in gene editing, and improved overall health outcomes. The healthcare sector alone represents a massive opportunity for NVIDIA's technology. Another critical area is productivity enhancement for knowledge workers. AI-driven tools are already increasing efficiency in professions that rely on complex problem-solving and communication. While some jobs will inevitably be replaced, AI's overall contribution to productivity will be a net positive, further driving demand for NVIDIA's hardware. With all these factors in mind, my conviction in NVIDIA remains strong. The company's leading position in AI hardware, its diversified revenue streams, and its exposure to multiple high-growth industries make it a standout investment. This research solidifies my decision to continue holding and accumulating NVIDIA shares, confident that the company's future is bright. If you found this analysis valuable, I encourage you to stay engaged, share your thoughts, and keep an eye on NVIDIA's ongoing developments.